Good morning, everyone. It's 8 a.m. Chicago time. Happy Friday. It's the 20th of November, 2015. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. The news overnight has been pretty tame. Key markets across the globe haven't moved much overnight. Basically in the um, 0.5% to 0.3% range in Asia, Europe. Participants seem exhausted after a very busy week. Just as a frame of reference, the ES has had a range of 91 points this week. 91 points. That's about a 4.5% swing from the low to the high. That 91 points includes a Globex session. Fed's Vice Chair Fisher, after the close yesterday, said rates to rise gradually in relatively near future. We have done everything we can to avoid surprising markets. Germany released its PPI report, negative 0.4 versus negative 0.2, so slightly worse. Negative 2.3 versus negative 2 expected year on year. ECB's chief, Draghi, says that we will do what we must to raise inflation as quickly as possible. He says that Draghi tells the world essentially that the ECB's monetary bazooka is loaded and ready to fire. So I think he's just pepping up the market for more action by the ECB. We'll see where that leads us. Essentially the CPI, PPI has not moved the way that the market has expected. Other than that, let's see. Other than that, looking at today's calendar, we have at 9 o'clock Central, we have European consumer confidence advance negative 7.5 is what's expected. At 10 o'clock Central, 11 o'clock Eastern, Kansas City Fed manufacturing expecting 0, and at noon Central, 1 Eastern, we expect the Baker Hughes rig count. No expectation. As far as speakers, Constancio spoke about an hour ago. And at 8 o'clock, Fed's Bullard right now on the economy in Arkansas. And then Fed Speaker Dudley at 10:15 Central, 11:15 Eastern on the economy in New York. So that's how things are shaping up for today. Expecting a fairly quiet day, actually. Let's take a look at the overall performance of the market. So looking at yesterday's action, yesterday's key expectation, if you were here for the trader bite, was to open inside of range. The expectation is that we take out this prior day's week high, but overall expected it to sit sideways for most of the session and then potentially try to push through later, but most likely fail and stay within the session. And that's exactly what we got. The reason for that hypothesis, excuse me, can't shake off the sore throat all week. The reason for that hypothesis is what we've covered it quite a bit. Is the fact that we are in this very, very large high volume node area. Let's switch to the 60 minutes so we can look at that again. And you could see that, as I pointed out yesterday, here we go. So when we look at the profile for this entire region here, we've basically moved from that 2050 cutoff point and started trading this heavy volume zone up top. That zone takes us all the way to the all-time highs. From here, because the market, the volume slips away as we move higher. So the expected action here is that the market is likely to push through and push that all-time high into the Christmas holidays. remember what's traditionally called the Santa Claus rally. So, as I commented yesterday, note that the close of Wednesday put in this high volume, very high kurtosis profile right up against this point of control. The most traded price in this area is the 2080.50, and we put in this high volume kurtosis on a Wednesday afternoon on the close. There's just a lot of trades firing there. By the looks of how the book was trading, I use the S5 book map for that. You can find it on stage5trading.com. Look under trading book map, S5 book map. But in general, looking at what came into the market, the heavy liquidity that sat in the dome all the way through here generated this high volume HVN here, and then what we did yesterday was basically to just rest. I mean, I constantly say that the auction is all about testing a low volume node, moving to high volume node, chop, and then if it accumulates enough buying power, it squeezes to the next high volume node, chop, and if it still has buyers interested, then it pushes through the next low volume node, chop. And this is exactly what's happening, except the chop here is incredibly compressed for an area that is fairly wide in its limits. The upper limit is around the 87, 88 area. Let me turn on the HVN, LVN lines. Here we go. So when I extend this out, we can see that the cutoff, the first cutoff is at 84, but the key cutoff here is 88.75. 88.75 represents this low volume area right here. Oh, I drew that pretty well. So 88.75, and that's really the area that we've been battling up to. And then from the low side, we have this 75.25. So this is the area we're fighting in right now. And you could see that yesterday it just could not push either way. Yesterday the hypo one worked out exactly almost a textbook, and I hate to say textbook because nothing textbook really applies in the market, but it's more of a textbook auction outcome. The auction was very much complete. And traded quite a bit in the same price. I mean, they just played these prices heavily. The auction yesterday was skewed to the downside. I was really looking for several failures to the downside. I was really would have been very happy seeing it go down and test the key LVN below at 65.50. Would have loved that, but it just did not have the selling interest overall. When we look at the auction, the shape of where we are as far as the volume is concerned and so forth, the volume has been pretty good. If you look at the volume on a 15-minute basis versus the 20-day median, it's been pretty steady. I mean, there's pretty solid participation in this movement. So we can't say that this is just incredibly thin and so forth. Yesterday's range was almost exactly the highest volume range, or the most common range for this product, dating back to 2013, October 9th. That's what this date here, this data, I'm pulling data all the way back to October 9th, 2013, and that's what's involved in these profiles. And you can see here the black line is the point of control of the ranges, and the most common range in the data set. And you can see how it sharply points out 9.25 with the first standard deviation, or the extreme of normal, or the outside range of normal range is 23.25 points, and then the second standard deviation is 40 points. Second standard deviation represents 95.45% of the data set as computed from the point of control. And volume has been steady at 1 million contracts per day. Again, the range and volume here are for RTH only, or pit session only. That's 8:30 through 3:15 Chicago time, 9:30 through 4:15 New York time. I'm leaving out the Globex session in my statistics pretty much across the board. I'm only interested in what's happening while the equities are open. So the volume and range are pretty much in line. So you expect a day like yesterday to have pretty anemic volume, almost like a holiday, but it did not. When I switch back to the 15 minutes, just going on with this volume based theme, it's coming up. So when I look at the 15 minutes, here's the opening bar. See the green line is the actual, and the yellow line is the 20-day median. You could see that there's a fair amount of participation here. The green or red bar, the actual bar for that 15-minute bar, are pretty much above or in line with the 20-day median until you get to the afternoon, and then we start to see volume just drop off. So these wicks that you're seeing here are 20-day median volumes for that 15-minute period that are much higher than actual. So essentially, the business was done early in the day, and then the OTF, or the higher volume, higher time frame participants, were just not present after the lunch break. They just never came back yesterday, and so we don't see volume even into the closing range. This closing bar generally has quite a bit of volume in it. Note that volume through the day always has this shape, with the first hour volume being much higher than any other hour of the day, and then it peaks out in the 2 to 3 o'clock central, or 3 to 4 o'clock central, the closing hour. It peaks out at the end of the day, and then you have this low volume chop in the middle of the day, and that's pretty much the routine every day. That's why we keep track of the initial balance. The initial balance really is where the biggest moves are defined in that first hour. So with that being said, my point is, the chop that we saw yesterday, the fact that it was stuck here yesterday, is not based on some sort of a holiday type of mentality. There's quite a bit of business going off here. And if you note, one of the biggest things to note about yesterday, just as you're building your contextual read, is that as price was going up, and pushing, the delta is testing lower and lower and lower. So what this was revealing to me is that as price moved up, there was definitely a distribution going on. So there was aggressive hitting of the bid at higher and higher prices. So the market was basically allowing price to come up, and it was hammering on the bid in aggressive. You have size crossing the market aggressively and selling into the movement upward. And throughout the day, even though the trade was pretty much slightly skewed to the upside, of course, again, I can't draw straight lines. The overall sentiment of Delta was pretty much flat. There's just no participation on the buy side here. The market sees this price as a great place to exit, in my opinion, and there's a lot of participation on the sell side in this area. Again, what's happening here is what you would imagine a trade desk at an institution is paid to do, and that is to get in and out while the market is quiet. Market moves from balance, where it accumulates energy for the next move, to imbalance, where it dissipates that energy until it reaches prices that are considered fair, and then it basically stops at those prices, and then it balances out. So yesterday you had volume that was really in line with the normal volume, but price was just really not doing anything, and any push up was pretty much immediately sold. So you look at this rotation here from 75 to 83, 8 points 8-point rotation up, and what we see is a delta that kind of follows price there. There's some aggressive buying that goes on here, but immediately they come in and sell it right back off. So it's really it's about sellers reducing their offers, and then as soon as the market slows down on the buy side, they're just pounding on the bid to sell into any pushes up at the moment. So today after yesterday, after a day like yesterday, today is expected to be a shift to imbalance, right? Normally, but given where we are contextually, given where we are in this high volume area, the expectation is the attempts higher are likely not to be too successful today. So with us opening above the range, let's take a quick look at the overnight session to check the inventory overnight and what it's done overnight, what the context is overnight. Essentially what we have here is, so this is yesterday's range. This is the prior session's overnight session. And you could see that basically last night's overnight session is simply retracing what it did the prior night, and it's really trying hard to push higher and into and out of this high volume node. The expectation here is that it's likely to fall. Look at the delta again. Inventory overall since the reopen. Inventory overall, the amount of action that took place is really flat. Price, the inventory from a price perspective, so classic overnight inventory is positive, right? Because yesterday's close is right here and price is way up here. But it did so on just no delta at all. I mean, in my opinion, inventory coming into today is pretty flat. And it's trying to go negative. If I line up this delta with yesterday, just as a continuation of what happened yesterday, you would essentially end up with delta trading in the same range in that negative 15,000. There was really nothing picked up overnight by buyers or accomplished by buyers overnight from a meaningful volume and price perspective. Price did move up, but volume is just not there. We do have a weak high overnight, so that gives us a potential of the overnight high more likely being taken out than the overnight low. But overall, I expect this to rotate down and move back towards this 80-50 area this morning, and I expect it to be a fairly lazy morning, especially since we really have just a couple of Fed speakers and nothing else, no other catalysts that are likely to move the market. So today's one of those days. I know I'm going way over my time here. Today's one of those days where I'm going to tell you right now, you're going to frustrate the heck out of yourself trying to catch some big move. Today is more of a short range stop, short range target type of day, unless we do have a lot of accumulation that builds on yesterday's profile, and then ultimately we have enough energy to move away from here, up or down. But overall, I'm expecting this to be responsive, to test this 87 quarter at some point, and then it's likely to fall back in and just be stuck here. That's the primary hypothesis today. Deep down inside, I'd love for that not to be the case. I'd love for an opportunity for this to actually sell off. Not that I'm a perma bear or prefer selling, but I believe the market can go farther selling off right now than going higher, given that we are entangled in this high volume zone. One last thing, if we look at the week and what we've done, so the market has pushed overnight pretty high up. So overall, it's right now it's trading 2084 right in here, and it's pushed pretty high up. We've already taken out, so this week essentially has taken out the prior week's low, okay, and has come back all the way and is tackling the high end of the prior week's range. A break out of here would take us up and through the next high volume node area, which would be the 98 area. But overall, this has been a really rough week for shorts for bears, and it's likely to continue to be that way for the next week or so. There's some stuff going on in Mali, hostage situation that involves the U.S. and so forth. I don't know if that's a new front in geopolitics, but I just don't see anything that's likely to push this thing down. The market's already kind of factored in the idea of a Fed rate hike coming. So I don't see what's going to likely push this thing down for now. So I would say be cautious if you are holding short positions, as I warned last week. And last week, when I warned about it, I also warned that I'm going to warn you this week about last week, warning you that you need to cover your shorts or hedge your shorts. And here I am doing it. Anyway, I've talked a lot. I'll leave you with that. Good luck today, and I'll catch you tomorrow. Take care.